Hi everyone, I'm on the DAX again this morning, just trading the DAX this morning. And if you've watched my videos that I've posted so far, you'll know how I prepare for the open on the DAX. And today is Wednesday the 31st of January 2018, and just like any day, I prepare for the open on the DAX by plotting some horizontal lines. So what I'm looking for is, first of all, what's the market been doing in the pre-market phase of trading. What's it been doing there? And also, what's the overall sentiment in the market? What's it doing? What's it been doing over the last few days? What's it doing on the longer term? So that's how I get a feeling for the type of trades that I might be interested in during the morning session on the DAX. So the morning session on the DAX the market opens at 8 o'clock, pre-market starts at 7 UK time. And you can see in front of us we've got the 15-minute charts. So on the left we've got the candlestick charts, and on the right we've got the line charts. And so what you can actually see from this is you can see that the market's been in a downtrend. Okay, so just using the line charts, you can see that we've got a lower low, possible lower high here, definite lower low there, lower high, lower low, lower high. So obviously you can see that the market's going down from the top left of the charts to the bottom right of the chart. So it's in a downtrend. And this is the last couple of days of trading, and it's coming into the open at 8 o'clock. So let's have a look in a little bit more detail what's been happening over the last day, over the last 24 hours. And so you can see that largely the market's been in a trading range over the last 24 hours. This horizontal level here is yesterday's close. So the market closed at 4:30 yesterday, just here, and that was the close price there. And you can see that in pre-market trading, beginning of the day, this is 2:30 in the morning, the market came down to this level, just tested it, went higher, came down again at 7 o'clock on the dot, and tested that level again. So it's in that vicinity. The DAX is a highly volatile market, and very often it adheres to a range that's established in the early hours of trading. And you can see that we've got overnight highs here at the 13,266 level. So that's the overall range that the market's been trading in this morning. We've also got the pivot level here, which is at 13,235, and I'd expect that to play a part as well. You can see that overnight the market came up, tested that level and rejected lower. So the initial trading range that we can, or the opening range that we can expect, will be between this pivot level and yesterday's close. So I'm going to zoom down into the 1 minute time frame now, and that's the time frame that I'll be trading this morning. So let's just do that. Let's go down to the 1 minute time frame. So looking at the 1 minute chart now, this is the open at 8 o'clock here. You can see that the market came down and it hit the yesterday's close level. It hit that level, tried to break through, and we got a pin. That's a bearish pin bar, and we've got rejection here. Just where we had rejection previously at 7 o'clock, we've got rejection again at 8 o'clock. So the market's rejecting the lows. The second candle that we get at the bottom here is a green bullish pin bar, and that's a sign of buying. Now we want to, as home-based individual traders, we want to do what the institutions are doing. We want to follow their trades. We can't move the market, but they can, and very often they trade within this pre-market range. They'll trade from the top down and they'll trade from the bottom up. And that's the early stages. Normally that's the pattern that the market takes in the early stages of trading. Sometimes, of course, the market just zooms through and goes in one particular direction, but more often than not, it will reverberate around the high and the low of the pre-market range. So that's what we're going to expect the market to do, and we need signals from the market that yes, that's what's happening. We need signals from what are the institutional traders doing, and we can see that these spikes, these rejection spikes at the bottom, followed by a bullish pin bar, tell us that the institutions are probably buying at this stage. So there's a good trade up here to the pivot level, and you can see that we at the pivot level, the market powered through that initial pivot level, and then we got a bearish pin bar. So we got a bearish pin bar here. There's a rejection on the top here. It's the rejections happening around about, or just above in this case, the level that we'd expect to see some kind of rejection if the market is operating as we'd expect it to. So probably wait at this point in time. It's above the pivot level, just wait. And so then we get another rejection. The market tries to go higher and rejects down, and the next bar goes below the open and the close of this particular bar, and that's where I entered my trade, just below the low of this red bearish pin bar here. And so for this particular trade, the market's powered up. It's really been a really strong move up. So we're looking for a reward to risk of about between 1-to-1 and 2-to-1 here. And so my stop went above the high of this pin bar here. If very often in this sort of situation there will be an extra attempt to go higher, but the market's already rejected these particular highs, so we're hoping that the next bar is going to be nice and red, and it was. And one thing to bear in mind at these particular levels, we've got the exponential moving averages here, the 90, the 20 and the 8 exponential moving averages, and when price is above these particular levels, all three of these levels, then it's indicating that it's got a bullish intention, and quite often the price reacts at these particular levels. So you can see here the market came down to the 8 EMA, traders bought at that particular stage off the 8 EMA, and the market went back higher. And so if it goes below the 8 EMA, you can expect it to fill this gap here between the 8 and the 20 EMAs, and then really it's a question of waiting to see what happens when price hits the 20 EMA. And again, got another pin bar, can't see it very well, but you got another pin bar at the pivot level, and the market came down. So the market came down, and it's closed below the 20 exponential moving average. You can see that it's closed below the exponential moving average. It's almost closed on its low. So we're at 1-to-1 risk to reward at this point in time. And for this particular trade, I decided to wait and see if the market could make it down to the 90 exponential moving average. And it did on the next bar. It closed, although it closed on its low, it closed just above the 90 exponential moving average. That was good enough for me. I took profits at that particular level. Obviously, there's a chance that the market could continue down further and come down to yesterday's close again. However, the risk of a bounce at this particular stage, we're at these highs here, the chances are that the market's going to at least retrace back to the 20 exponential moving average back up, and I wanted to take profits whilst I was in the green. So that was the second trade of the day, and you can see that the market then did bounce back up, and it actually bounced up to the 8 exponential moving average. And so the market then carried on upwards and broke above the pivot level this time. So some traders would have played the break of these highs here and bet on the market making the overnight highs, and that would have been a good trade as it turned out, as the market powered up to the overnight highs. So we're looking at these overnight highs, we're looking to see what does the market do, what indications is it giving us that it's rejecting or it's accepting these higher levels? What's it actually telling us? Well, the market made it easily up to this level. There was almost a vacuum, as there often is, up to this level. Nobody was trading short at this particular stage until it reached the level, and at the level the market moved up and put in a spike. There's a rejection spike at the top. That's a bearish red candlestick bar. And so again, we're thinking, what are the institutions doing? And it looks, the initial signs are that it looks like the institutions are selling at the top. But we need more evidence. This is a strong move up. We need more evidence at this particular stage. And so what we're looking for in terms of evidence is we're saying, okay, so we'd expect at this stage for the market to go down. We would expect it to go down because the market on the longer term is in a downtrend. And so you would expect that institutions seeing value would sell at previous highs. We're at previous highs, and so we need evidence that they are in fact actually selling. So strong uptrend, and in this particular case we'd be looking to see some kind of double top or triple top or head and shoulders top up here in order to give us confidence to take the trade back down again. So let's see what actually happened. Market came down to just above the 8 exponential moving average and then made its way back up. So at this stage we're testing the highs. We're testing these highs here, and this particular candlestick, this one here, actually closed just below the close of the previous highs here, which is a good sign in terms of the market reversing. Got another, this was an engulfing candlestick, a red bearish engulfing candlestick, and that's a really good sign that the market may be rejecting these higher levels and going down. This particular candlestick, it actually closed below the 8 exponential moving average as well. Have a look on the line charts just to see what that actually looks like. You can see everything a lot clearer on these line charts, but it doesn't tell the whole story. And in order to place your protective stops, if you're trading lower, then your protective stops probably got to go above the actual high rather than above the closes. Line charts are based on closes, candlestick closes. But you can see the double top here. That's a high, higher high, and that's a lower high. So just waiting to see now what happens, because we want the market to come down below the middle of the double top in order for us to take a trade. And it did so just there. So let's have a look at what happened next. Market just bounced slightly and then came right down. We're just above the 90 exponential moving average at this point in time. You've got your stop probably up here. Traditional ways of trading double tops would say put your stop above the lower high, which is what I did in actual fact. And so your entry's down here, and by now we've got nearly 2 to 1 risk to reward. That's where I took my profit. So let's just see what happened next. Well, the market shot down. It shot down and it produced a huge gap. Look at this. This candlestick closed here at 13,243, and the next one didn't open until 13,241. So there's a 2-point gap there, and that's a sign of strength for the sellers. But it's also, and the price nearly made it down to the pivot level. This would be an excellent place for the majority of traders to take profits. And one of the reasons we've had a sign of strength here, the market's gapped down. However, the market likes to fill gaps, and although that's a sign of strength, the chances are that the market is going to bounce up and fill that gap, which is actually what it did immediately. And so the market then went back up again. As the market progressed through the morning, we're bearing in mind this particular gap here, because that is a sign of strength, and there's not a lot going on here that really gives you evidence that this what was this gap here for? What was it? Well, we know that it's the institutions selling. We know that. We know that it's them selling in huge volume. And the chances are that as the market comes up, the chances are that the institutions are selling again up here. Don't forget, we're in a longer term downtrend and they're selling again here. The market goes above the exponential moving averages and then big, powerful bear bar. Goes above the exponential moving averages, big, powerful bear bar. And this is the around number level, 13,250. So it's a good level for them to trade lower from. And another big bear bar materializes here. And these are all signs of strength. When the market's going down, the institutions sell from above the exponential moving averages and they sell powerfully. When you see that once, when you see that twice, then if it starts happening again, that's a good level to get in and go short. And indeed, the market then did go down. In fact, it went down to just above yesterday's close once again. And that was the end of the trading morning for me. So get to know how to trade the DAX on the open, get to know the horizontal levels, get to know how to plot them. Use the pre-market action to give you clues as to what's actually going on in the marketplace. If you want to learn how to read price action, if you want to learn how to read candlesticks, how to read the line charts and trade chart patterns, then take a look at our day trading course, our day trading and swing trading course, or our Forex course. If you're trading the Forex markets, they all operate in the same sort of way and produce the same sort of chart patterns. And I think that you'll find if you're going to trade as a profession, if you want to trade for a living, then you need a proper education, and I'd be pleased to work with you in order to give you that education. I've been trading the markets now for many years. It's a skill that does take time to develop, and if you put the effort in to learn, then you can do it. You can be profitable, you can be successful as a home-based independent trader. If that's your goal, then give me a shout. I want to work with you and I'll help you to achieve your goals. So my name's Anthony Beardsall. Hope you enjoyed that bit of price action analysis, and I'll catch you on the next video. Bye for now.